Hey traders, ever wonder how to predict the next move in the market? In today's video, we are going to be looking at the foundation of technical analysis, market structure. Let's dive in. What is market structure? Market structure is simply the movement of price. Price moves from one point to another, but price moves in a particular structure, which is what? An uptrend, downtrend, and a range bound. These are the three main structure you want to understand. In this particular episode, I'm going to be explaining an uptrend to you, and I'm going to show you a valid uptrend and an invalid uptrend. Let's dive straight into the video. For an uptrend, you want to see the market forming a series of what? Higher highs and higher lows, right? So once you have the market forming a series of higher highs and higher lows, you tend to see you are what? In an uptrend. Let's look at the graphical representation of this, right? So if you're looking at our chart right here, you can see that price created what? We can call this, let's start from here. We can call this our initial movement, which is this particular point. So this is our initial movement, which can refer to it as a low, and you can refer to this what as a high, right? So this initial movement, assuming you were starting your analysis from this point, this high, this low, and this high, you don't say you are in an uptrend, right? Until you have the market forming consecutive what? Highs and lows like this, right? Now we want to see at least after this first initial movement, you want to see at least the first high closing above what? The recent high that was formed. This tells you are what? In a valid uptrend. So look at this. You notice that we have this high, we have our low. Now we have price what? Giving out a retracement. Now this retracement is what we can refer to as what? Our higher low, right? Now price now moves in and goes up, right? Now when price creates the recent higher high, now we can say we are in an uptrend. Why? Because price has created what? A new high that was higher than the previous one. So once you see this high, this recent high higher than the previous one, you say what? You are in an uptrend. Now you want to make sure that the recent low that is going to be formed does not break and close what? Below what? The low you had. So you can see that price just came and tapped here with a wick, right? We just have this candlestick wick just tapped into this zone, telling us that our uptrend is still what? Valid. Now we have this as our next higher low, right? So this is our new higher low, and price moves all the way, breaks out of our higher high and gives us what? A new high. You can see a new high that has been formed here, right? You see that price continues with the same movement, creates what? A new what? Low, right? So this is now what? A complete valid uptrend. Why? We see that price is having a series of what? Highs, low, higher high, and a higher low. You can see the same pattern continues. This low now moves up and breaks what? The high we have here, creating what? A new what? Higher high, and now we have what? A new what? Low. You will notice that I am using what? The candlestick closure, right? The reason why I'm using the candlestick closure is because there is more information on the candlestick closure than the wick. You can notice by looking at what? Your line chart. Once you look at your line chart, this is a good representation of what? The real price, where price was actually trading. The wick is just where price at the lowest point price went to, but that was not where price closed. So I always use what? The body closure for my market structure, right? So you can see the pattern continues. Our next high is this one, and you can see that where is our next low. You want this now is not going to be our next low. Why? Because you notice that this particular low was unable to close to take out what? The recent high we have here. So where is our next low going to be? This is still our low, this is still the high, this is the most recent high we have. Until we get a low that is going to take out this high, then we're going to refer to that low as what? A higher low. So this is the only higher low we have here, because it was this higher low that took out what? This higher high here, right? That is a mistake most people are going to make. They are going to be referring to this as a low, then refer to it as a high. Then when price breaks out of this one, you tend to say, well, there is a change of character, which is very wrong, right? Now you see that there is no change of character here. This is still our main structure we have here, and this is the main high we have here. And you can see price eventually broke out of this one. Our price created this new high, and this is the low we are going to be looking at, because this is the low that took out this high and now this is going to be our new high. This is still our low until we have a low that is going to take out this high. So you can see that if you extend this to this side, you can see that we are still what in our main structure, and this is still what our low, right? So this is still your low. So all of this is what we call an internal structure, right? This is still the internal structure because we've not had any higher high, we've not had any higher low. All of this is internal structure. The only place where we have a shift, a change, is where we now see this candlestick break out of our low. At this point, we are now moving possibly in a downtrend. So I'm going to end here. I hope you learned a lot from this video, and I'm going to be dropping the next one on the downtrend. See you in the next one.